Picture this, a city once known for its space industry is now rocketing towards a housing boom with thousands of new rental units hitting the market. Welcome to Huntsville, Alabama, a city experiencing a remarkable surge in rental housing construction. But is this rapid growth creating more opportunities, or is it leading to a long-term economic divide? Let's dig into the numbers and the consequences for Huntsville's housing market boom. Huntsville's been at the forefront of apartment development in recent years. In 2024 alone, the city grew approximately 7,000 new apartment units, which expanded the existing inventory by a staggering 17.4%, and that put us ranked 24th amongst the nation's largest 150 apartment markets for completions, surpassing much larger markets like Boston and even Los Angeles. This boom isn't a recent phenomenon because between 2020 and 2023, Huntsville added over 12,000 housing units with multifamily and townhome developments leading the charge. In fact, 2023, 74% of all new housing units were rentals, a trend that really raises concerns about homeownership opportunities in the Huntsville market. All of this inventory is starting to catch up with us, however. As of May 2024, the vacancy rate for apartments in Huntsville, Alabama was 19.2%, which is significantly higher than the national average. This surge in vacancies is directly tied to the large increase in new apartments that are being built right now, which really has outpaced demand. So the increase in supply has also led to negative rent growth, with rents decreasing by 2.6% over the past year. And that's really not even factoring in all the free months rent that they've been giving away as well. So this benefits renters in the short term. However, it raises concerns for developers and investors who are seeing slower lease ups and potential financial risk. And I think that creates a concern for the city overall. If there's financial risk for the developers, what are the deferred maintenance going to look like for these buildings long term, and will they become an eyesore for the city over the next few years? Beyond traditional apartments, Huntsville is also seeing a major surge in what's called BTR, or build to rent. These communities, these developers offer single family homes for rent instead of for sale, and they cater to those who want more space but aren't looking to buy right now. As of 2025, Huntsville has more rental housing under construction than most US states, making it a hotspot for this growing trend. While this provides flexibility for residents, it also raises a lot of concerns about the long-term impact on wealth building opportunities for Huntsville's population. While renting offers short-term convenience, the long-term economic impact of a rental-heavy housing market is concerning. Studies show that the average homeowner has 40 times the net worth, 40 times the net worth of the average renter. So in 2022, the median net worth of homeowners was $396,000, while the median net worth of renters was just $10,400. That staggering difference underscores how homeownership is one of the most significant ways Americans build wealth in this country. Property appreciation, tax advantages, and forced savings through mortgage payments all contribute to homeowners' financial security, advantages the renters largely miss out on. With so many new housing developments being built for rent instead of for sale, more residents can find themselves stuck in this cycle of renting, missing out on the financial security, that 40 times net worth that comes with owning a home. If this trend continues, it could create a large economic gap between those who own property and those who don't, ultimately affecting long-term financial stability for the Huntsville market. Despite the rapid expansion, demand for rentals has remained relatively strong. From April 2023 to April 2024, approximately 5,110 rental units were absorbed, almost matching the 5,885 that were delivered during that time frame. However, the sharp increase in vacancies and negative rent growth indicate that supply may be, and I would say is, outpacing demand faster than expected. So what's the good news? Well, the gap between supply and demand is expected to narrow in late 2025 and into 2026. If demand holds steady, the market occupancy could return to a 90 to 93% range within the next 1 to 2 years. This means the current oversupply may stabilize as more people move to the Huntsville area, and rental rates could level out or even rebound during that period as well. Much of this anticipated demand is driven by significant federal investments in the area. The FBI has recently announced the relocation of 500 employees to its facility at Redstone Arsenal, a move that will further bolster the city's job market and drive housing demand. Additionally, Space Command is expected to be relocated to Huntsville under the Trump administration, further solidifying the city's role as a defense and aerospace hub. Huntsville remains a leading candidate for the official relocation of the U.S. Space Command headquarters. I expect Trump to overturn that and move Space Command to the Rocket City. That headquarters could bring approximately 1,600 new jobs to the area. If this relocation is finalized, it will have a major impact on the city's economy, driving more people into this housing market in Huntsville. Huntsville's housing boom is fueled by a strong local economy and population growth, particularly in the industries like aerospace, defense, and technology. These high-paying jobs attract new residents, which has supported both rental and home ownership demand. However, if the city becomes too rental heavy, it could limit the ability of residents to build that generational wealth through home ownership. If you're a renter or want to take control of your financial future, schedule your free home buying counseling session today. The link is in the pinned comment section. Let's start building wealth together.